Let's look at the data. Right now, what the news is telling you and what the market is actually doing, well, they're two totally different things. And that divergence, that gap between story and reality, it's not noise, it's an opportunity. Let's break it down. So you open your feed and what do you see? Fear. Headlines just like this one are everywhere, pushing this narrative that the AI trade is toast and that even the giants like NVIDIA are going down. This is the noise, and you gotta understand it's designed specifically to get an emotional reaction out of you.
But then you turn off the news and you look at the actual numbers. The Dow, the S&P 500, both showing solid green days. But the real story here, the real signal, is the Russell 2000. That's the small cap index, and it's absolutely ripping, up almost 3%. A small cap rally? That signals confidence, a risk-on appetite across the whole economy that the headlines are completely ignoring. This is the divergence we're talking about.
So how do we actually use this gap? You know, this disconnect between the public story and the hard data is exactly where disciplined traders find their edge. It's all about learning how to filter out all that chatter to find the one true signal. The mission here is to totally flip your mindset. You've got to stop being a reactive person who just consumes news and start being a proactive hunter of data. You're not looking for articles that confirm what you already believe. You're on the hunt for market anomalies that tell you the consensus is dead wrong. So what in the world is a market anomaly? It's actually pretty simple. It's when the smart money, we're talking institutional players with billions of dollars on the line, starts moving in the exact opposite direction of the public narrative. Their footprints in the data, that's the signal. And it is infinitely more valuable than some speculative headline. And look, this isn't just theory. Let's pull up the logs right now and find a live example happening in today's market.
Okay, check this out. STAR Surgical, ticker STAA. This data is pulled straight from insider transaction filings. What we see here is a 10% owner, an insider called Broadwood Partners, making 3 huge buys on 3 straight days, November 19th, 20th, 21st. Boom, boom, boom. They are not testing the waters here. They are aggressively loading the boat. This is a textbook anomaly.
And let's be crystal clear about the level of conviction we're seeing. This is not some small symbolic purchase. This is over $41 million being deployed into one stock by one insider in just 3 days. That kind of capital commitment, it's a massive signal that they believe the market is getting the price fundamentally wrong. So we found the signal. Now we have to understand why it has so much more weight than all the media churn. This is all about learning to decode the institutional playbook. Why do these insider buys matter so much? Well, first, there is real capital at risk. This isn't just someone's opinion in an article. It's a multi-million-dollar bet. Second, it signals long-term conviction that goes way beyond whatever happens next quarter. And third, these insiders have a level of insight into their own company that no analyst on the outside could ever hope to match. They just know more. And that, right there, is the core idea. Headlines are temporary. They're designed to be disposable, to get you to click tomorrow. But large capital flows like this, they're structural. They literally change the supply and demand landscape for a stock. They represent a fundamental belief and value, not just some fleeting emotion. So for a retail trader, the objective becomes very simple. You do not fight institutional flows. You can't win. The real goal is to use this data to understand the market's true structure and align your own strategy with these powerful currents. So how do we pull all this together into a smart, data-driven strategy? Okay, here's the objective breakdown. The bull case is obvious. Massive insider buying plus positive market breadth points to a seriously high conviction setup, a potential undervaluation. The bear case, though, and you have to respect this, is that the macro risks the headlines are screaming about are still real. An insider buy is an incredibly powerful signal, but it is not an absolute guarantee. A smart trader always weighs all the factors. So here are your key takeaways from all this. Number 1, always question the popular narrative. 2, follow the actual data flows, not the chatter. 3, assess your risk like a professional. And most important of all, remain data dependent. Let the numbers guide your decisions, not the noise. Now, of course, I have to be very clear. This analysis is for your education only. It is not financial advice. The data we've looked at here is a snapshot in time, and you know how quickly markets can change. You must always do your own due diligence. We're tracking these flows in real time. So while you're analyzing the next move, you should check out the tools in the description. You can sign up for Public and get $20 in free assets, check out Webull for that BTC promo, or look into NVDA on Moomoo. All the links are down below. And for more deep dive analysis like this, make sure to like and subscribe. So I'll leave you with this question. What contradictions is the market showing you today? Look for them, analyze them, because that's where you're going to find your opportunity. Stay disciplined, stay liquid.